So what kind of an upside, just if we're going to ring fence off the China tech names, can we be looking at? Because obviously we got that huge short squeeze playing through at the end of last year, but are you talking 20%, 30%, or is it really, you have to be selective and it's a case-by-case basis on what you're looking for?
We certainly called bottom in October 24th, just after the party Congress, and obviously we've seen many of our names and others in the market double since then. And I think a lot of the trading that's gone on around China by global investors is driven by irrational overreactions to what is fairly innocuous data coming out of the market or central party decisions. Our expectation is that there is probably another 50 to 70% upside in many of these names. They're trading well below their fundamentals. The market has, again, been significantly underpriced because of many of the geopolitical, zero COVID, as well as overall kind of investor apathy towards the market because of this break in trust that occurred over the course of the last 3 years. And so I think there's significant upside in China, far more than in the West, just given the fundamentals we have. Relatively low inflation, less recessionary fears, and overall support from the government to stimulate growth this year as a critical lever of maintaining stability in the country.
Now, you did mention global investors because obviously the flow coming into China is critical when you're talking about just the investment standpoint. So, and you mentioned the geopolitical as well. Do you not foresee that there could be further risks down the road? We heard from Biden, who did seem to be relatively stout when it came to China. We've had the balloon gate experience over the last couple of weeks. Do you think that people are going to look past that, look past any kind of further measures from the Biden administration in the run-up to the presidential election, and just engage in their own little bit of a reset when it comes to China? Because there was such risk being applied to the deterioration of that relationship. Do you think that it's going to be enough what we're seeing now in terms of what China is trying to calm those tensions, to allow for those big institutional investors to bet in and bet in again big?
The geopolitical situation is one of the factors that's probably the most out of control of Chinese regulators. They can affect zero COVID. They can affect how they deal with technology companies from a regulatory perspective. They affect how they can engage with domestic and global public markets. But geopolitics is challenging. They've to date towed the line on Russia and avoided seeing knock-on sanctions of their market as a result of supporting Russia publicly, militarily. But the U.S.-China dynamic is one that is increasingly complicated. It's one that I've said for the last few years and obviously for the last few months is probably one of the biggest looming threats to China. It's more of a reputational threat rather than something that is truly economic, in the sense that I think you will see some type of U.S. capital ban, a kind of reverse CFIUS that was supposed actually to be announced after Blinken's visit to China, which, as you said, has now been pushed back because of Balloon Gate. That, I think, will scare off a lot of global investors simply for fear that they're supporting a regime that's in the crosshairs of U.S. from a political perspective. But fundamentally, I don't think it affects the numbers in the Chinese market. It simply scares off some of that kind of ancillary foreign capital. So I do think as the market stabilizes, we will see a rebalancing and an improved Chinese economy in spite of continuous U.S. challenges.